Hey everybody, this is 𝙎𝙤𝙘𝙞𖖙𝙖𝙡 from 𝙁𝙤𝙇𝙑 I'm here at day 3 of the New Orleans Investment Conference, joined by first-time guest on the program, Otavio Costa of Crescat Capital. How are you doing today?
Thanks for having me, Rob.
Well, thank you so much for agreeing to the interview. I know we've followed your work at Crescat for a long time. You guys put out wonderful reports, especially on the precious metals. We love that. We use it on our channel all the time, so good to speak to you, and thank you for...
My pleasure.
So tell us a little bit about your firm. We were talking about this before the interview. How did Crescat get started, and what was your role when you came on in 2012? And to modify and sort of evolve that from where it was?
I think it was really built in principles of value investing, where Kevin started in the 1990s, and it kind of evolved from there, where a lot of the models and the quant models he was building was leading him to macro views.
Okay.
And so when I came in with the macro lenses and started to use the same principles on the macro side, that's really when we started to combine value and macro. And then in 2018, we started to really get bullish on precious metals, and is when we decided to partner with 𝙁𝙤𝙘𝙞𝙖 and start a hedge fund on the precious metals side as well. And so that's sort of how it evolved over time. Crescat now has 3 funds: a global macro, long short, and a precious metals fund. And our goal is to invest in a lot of what we think it's going to be world-class discoveries in exploration of commodities, but mostly precious metals.
So if you could kind of summarize, what is your macro view that led you into gold?
Macro view, I think it all started with my views about the yield curve inversion at the time, which leads to the conclusion we're going to see deceleration of growth and perhaps further monetary and fiscal disorder. I think that's what it comes down to. We can discuss inflation, deflation, and the optionality for gold and how that works in different market regimes, but and it does. But I think it comes down to the lack of organic growth in the economy, that it needs further fiscal and monetary stimulus to allow the economy to continue to pile on more and more debt, unfortunately. And so I think that's, it comes back to the no anchor on the dollar and fiat currencies when it comes to value. And we've seen the disciplinary issues since the 1971 and so forth. And I think it's about time where tangible assets will start performing much better than financial assets. A long answer, but a lot to unpack in terms of that. But it's very excited about the space.
Yeah. So we're at the New Orleans Investment Conference, Brian London's conference, a great conference of you guys haven't attended and want to attend. We cover the broad, spectrum of investments. We look at real estate, we look at stocks. But gold and silver really has taken sort of center stage. We had a private event last night where we're talking about gold and silver and its role. And I think that there's somewhat of a lack of awareness around gold and silver, especially with the younger crowd.
Yeah.
What is your view on that? Do you think it's starting to come into focus, or do you think there's still a lot of room for people to learn about that sector?
I think gold is a bigger issue than silver when it comes to younger investors, and perhaps just the potential of returns and relative to other things. And it's just it's been so easy to make money in the markets these days that people are just much more attracted to things that have a high potential of returns, and that's not gold. You're not going to get rich by buying gold. You're going to protect capital by doing that. And silver, I think it's more appealing to the younger crowds. What I don't think that a lot of people get is the leverage to gold price where you get with mining, and I think this is, for me, in terms of the educational process to younger people, that I think I'm trying to bridge that gap with them, as far as explaining it. Look, it's not about the 15-20% increase in gold prices. It's about owning a property that has gold and silver in the ground, that has the leverage up to multi-bagger type of potential returns, if you get that case right. And so I think that's, for me, is where the attractiveness of the industry really is. But yeah, you're absolutely right. The sentiment has never been this way. Well, it has been before, but it's certainly it's not. Precious metals is not only in a weak sentiment right now, but it's also oversold relative to commodities, to equity markets, to pretty much anything you can think of. So it's a good time to be allocating capital to that, in my view.
So in your funds, do you incorporate the miners in that as well in your strategy?
Absolutely. I would say 85% of what we own in the precious metal space is on exploration. So we have funded over 90 deals. We obviously have core positions, and so the core positions are bigger at things that have worked in the past. And so we let the winners run. and we have more smaller positions, and so 90 companies with a lot of focus in geographic locations, and it's a pretty comprehensive strategy, I would say. That's how I like to think, but it's a lot of things we're doing with capital right now.
So talk about Dr. Haney and your relationship with him and how he has influenced your approach to the market.
So it really started in 2019 when we were really trying to dive into this industry, and we're looking from the macro level and wanted to buy most of the major companies and realize how the depletion of reserves was really a problem, and the trial or attempt to replenish those reserves is going to drive liquidity towards the exploration names, and the lack of understanding and lack of knowledge on geology from our side is what was lacking to participate in that market. I mean, how many investors with smart capital are really taking advantage of that side of the industry? There's certainly a lot of people doing things, very interesting things on the developing side and the producer side. No one is doing anything in a smart way on the exploration. So we wanted again to bridge that gap inside of the industry. Kevin and Quentin were neighbors back in the 90s, so that's another story for another day. But Kevin reconnected with Quentin, and Quentin, in a very exciting way, was sharing some of his ideas on the exploration side. And obviously, we knew Quentin's success and probably one of the most successful exploration geologists. And we said, look, we get the macro side, we get the thesis. So how about we partner and we'll bet on every idea that you tell us to do. And so he's the person on the geology side who tells us yes or no, and we will have a whole team behind it to negotiate the deals and move forward from there, which is a lot of work as well, but it's been a real pleasure to work with him. I think that's where it becomes very niche-y what we're doing.
Yeah, he's one of the most respected geologists in the field. We had the pleasure of interviewing him on our channel a few months ago. Got into a great conversation afterwards around geology, and he's just so knowledgeable, about the field that it definitely is a resource that we look to as well at Gold Silver Pros to help us out, because we do, invest in the miners and want to help our people, look at the mining sector as well.
Yeah.
I have a question about the gold cliff chart that you guys have in one of your documents. It's a wonderful chart talking about proven and probable reserves. And the cliff really starts in 2030, but I actually argue it kind of starts in 2027, where we start to see the lack of the proven and probable gold reserves.
Yeah.
What does that mean for the industry? Are we exploring enough right now, do you think, to replace those reserves, given the time frame it takes to get through exploration and then into development and then into production for the average mine?
Rob, in the macro world, there's a debate between inflation and deflation happening, and it links to this idea that you're referring to. I think what deflationistas, they call, are missing here is this long-term decline of capital spending in the natural resource industries. We've had this for a long time, and it's almost like the COVID situation really accelerated the problem. It wasn't, perhaps we're already heading towards an inevitable raw material shortage, in my opinion. And so in the gold space specifically, yes, we have seen basically zero new discoveries of gold and silver in the last 3 to 4 years. It's been very difficult to find that, and there's no doubt there has been no capital coming into the space. There has been no M&A. Equity issuances are basically at the bottom. Companies are not leveraging up. This is not 2011. This is companies are paying down debt like we've never seen before and producing free cash flow. So those are all signs, in my opinion, that of an early stage bull cycle for precious metals. And so in my view, the net accumulation of cash is perhaps just another form of investors to see this. You always got to think about, in my view, how does liquidity come into the market? Well, it could come in from institutions, it could come in from investors, but it could also come in from the actual industry looking into having to purchase those projects, high quality projects, to replenish their production. I agree with you. It might happen earlier rather than later, and I think it's the time to act now. So we want to own or have a participation in most of the projects we think are worth an investment. So it's a broad strategy. It's not picking and choosing one company that will work over time, but it's really diversified. You guys covered that well. I think that's a wonderful strategy for the next few years.
What about the physical precious metals? Does it make sense to hold gold and silver bullion at all?
Oh, I think it does. It all depends on your strategy. If you're trying to protect capital and hold your money or wealth for the long term, I think that's a great strategy. If you're trying to grow money in a more exponential form, it's probably not the best form. So it all depends on what you're trying to build here. At Crescat, I don't think we have much of a niche product to hold physical gold or silver. I think there are other strategies people can pursue rather than investing in Crescat. For us, it's worth to put intellectual capital into looking for the best opportunities in exploration and development stories in the space. But I like it. I think it's similar to other ideas. It's one way to protect capital against inflation.
So talking about the broad commodities market, you mentioned that we've seen price hikes in copper, tin, zinc, lithium. A lot of these base metal markets are doing very well. Do you guys also focus on the broader commodities market in your portfolio?
We do. Look, it's really interesting what's happening. It's we're talking about precious metals only here, but it's if you look across the entire commodity space, capex have been declining among the whole space really. I would say especially in energy, also base metals, agricultural. It's been a disaster. Capital spending in agricultural commodities and farming has been absolutely, it's been the worst. And so I think that's why I say this shortage of materials was inevitably going to happen. I mean, this is it's something that was just a matter of time. It really intensified, magnified by the pandemic issues. But just look at the amount of geologists coming out of that are applying to college degrees. We're not seeing any people looking to become a geologist today, or just that the whole mining labor has been in a shrinkage trend for many years. By the way, that's another way of seeing when we hit the bottom for commodity markets in general is when the labor market is so weak. And so those are all, look at the infrastructure to drill something. You're going to get a drill pad. It's tough. It's tough to find people to drill. I mean, we've never seen this before. It's just nothing to do with the pandemic, in my view. Well, it has something to do with that, but it's been a long-lasting issue that I think it's finally becoming something that people are talking about. So, I'm very excited about. I think every commodity has its own attributes. Energy is a shorter cycle usually. You pay up for the leverage. Those companies are usually more indebted, and that's fine. That's a very profitable business model too. You got precious metals, have a cleaner balance sheet today. For me, that's why I like it, because I think the business model makes a lot more sense. It's profitability, margins are really great. Their balance sheets look strong. Base metals are a little bit more expensive than precious metals, but just because they had a move recently, it doesn't mean it's the end of the world. It's also extremely attractive, and agricultural commodities look incredibly attractive to me. I think that those are going to be the next issue. We saw lumber prices, energy, lead, zinc, everything has been kind of taking off at their own times. And I think the next one is agricultural in a large way. We saw some of that, but I think we're going to see a lot more in the following months.
So we were talking about this last night, the debate around why people are not coming into the mining sector, why they're not investing in it, why they're not investing in miners and resources. And one of the theories posited last night by one of the mining company execs who happens to be a millennial, he's in the younger generation, has a lot of friends that are millennials, and he says millennials don't want to invest in mining because they don't care. I mean, they care about where the resources come from, but they're trusting the big tech giants, the big companies who are using those into their end products to manage the supply chain. You use the example of Amazon having their own team of geologists, and these companies having their own geologists. And my thought was, but it's never been that I've seen in history where one company could manage the whole supply chain front to back. A lot of companies have tried it. Google certainly tried to do it, laying fiber and trying to be a telecom, and that's largely failed for them, and they backed off that strategy. So it's very hard to vertically integrate everything into one company. What's your view on that? If we just put money into the end products and trust these companies making them to manage the entire supply chain, including where we're getting the supplies out of the ground, Is that feasible at all in your eyes, or do we need to have companies that specialize at each stage of the supply chain, do you think?
Rob, it's been insane what's happening, especially with the allocation of capital. I've never seen anything like this. Of so much capital has been focused on software and technology.
Yes.
You know, software is going to eat the world, but you can't eat software.
That's right.
You know, it's
good point.
It's you know, we need the basic parts of the economy through natural resources have been left for that, and so I think you know, it's funny how I'm a millennial. I hang out with millennials all the time, and it comes down to making money at the end of the day. Unfortunately, that's you start seeing someone getting rich because they bought a mining company. You're going to see millennials be like, huh, that sounds interesting. What is he doing? It's just a matter of, you know, of the cycle. You know, it's obviously has been out of favor. It's a very contrarian play. There's no doubt about that. I think the read that you said, I agree with you, by the way, on your opinion about what that person said to you. I think it's a good read of what's happening today, but that's not how you should invest. You should invest on what you think it's going to happen in the future. And I think there's a lot of room for changes from that mentality standpoint. And in my view, millennials, yeah, it's, you know, they grew up, you know, we grew up in a different environment, no doubt. I mean, it's and software has been a huge part of this. I mean, it's most people go to college. They don't go to college to become a geologist. They go to college to become a technologist. And so,
Sure.
I think it's absolutely normal. It's consumer behavior. It's cyclicality of markets. The secular trend is as commodities begin, people get it. They know what commodities are. It's just we haven't seen a commodities bull cycle. In the 70s, you'll read newspapers of the 70s. It wasn't about Amazon or the top company at the time. It was about, you know, corn prices. It was about wheat prices. You know why? Because that was the hot commodity at the market at the time. And so things can change very quickly. I think there's a lot of room for that. So very excited. It's nice to be in a contrarian position, I would say. So I feel that way today.
Yeah, I agree with you. We like to play the cycles, and we're very much contrarians. And I think our thesis on gold and silver in the commodities markets is very similar to yours. So it's good to hear, you know, somebody of your stature at your firm agree with that. So you're giving a talk today at 5 p.m.
Yeah.
Preview a little bit of that for our viewers. What are you going to be talking about today at New Orleans?
Rob, I'm struggling putting it all together because I wish I had 3 hours to talk about this, but it's really a lot of things I would like to discuss. I've been accumulating over 100 charts, 200 charts that I love about the macro environment. I want to talk about my views about inflation, how I think that that's playing out in regards to the pillars of inflation, what are those, and why this is systematically changing and creating a structural shift in the economy, and how we're going to see market leadership changing. I want to quantify why the Fed is trapped. You know, we all say that, but why? And put into numbers, and I did that. I want to show. Is the precious metal space a value trap, or should we be buying the dip? And if we are, what are the metrics behind it? And how do we look at fundamentals to drive our views about the cyclicality of the industry? You know, are they raising money? How much are they raising? How much have they done it in the past? Are they paying down debt? What's the profitability? Have we ever seen such a cheap multiples at the peak of the market? No, it's usually the other way around. Cheap multiples are at the bottom. So I want to, you know, really try to dive into to what are the macro theses behind gold and kind of why we're doing what we're doing, and you were doing what you're doing as well. So it's I'm very excited about it. Hopefully I'll deliver.
Tavi, thank you so much for joining the program. I appreciate you. This has been Otavio Costa,
thank you,
partner at Crescat Capital. We love his work, and we'll continue to provide more coverage of that on our channel. Thank you so much.
Thank you very much. Yeah.
Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.